All right. Hi, everybody. My name is Richard Lesperance. I go by the name of my man Richard. Welcome to A Better Lifestyle. Today, I have the pleasure to have Jay Connor with me. Welcome, Jay, to the podcast.
Well, good morning, Richard. Thank you so much for inviting me to come along and talk about my most favorite subject, that being private money. I'm so passionate about it because private money for real estate has had more of an impact on my business than any other strategy.
Okay, so tell us a little bit about your story then.
Sure. Well, my wife, Carol Joy, and I, we live here in eastern North Carolina in a really, really small town called Morehead City, North Carolina. Population only 8,000 people. We're here in a resort area. And our total target market that we invest in real estate, it's single family houses, primarily what we do. We've been full time since 2003, full time investing in single family houses. We've rehabbed and flipped a little over 500 houses. And the first 6 years, from 2003 until 2009, all I knew to do, Richard, was go to the local bank and get on my hands and knees and beg and pull up my skirt for the banker to look at all my personal assets and get a colonoscopy and get my credit score pulled and all that. And that's all I knew to do for the first 6 years to get funding for my real estate deals. And that worked okay the first 6 years. But Richard, then in January of 2009, I called up my banker and we had done a lot of deals for 6 years. I had two houses under contract to purchase. And I found out like that on that phone call that my line of credit had been closed with no notice. And I said, and Steve was my banker. I said, Steve, what in the world do you mean you've closed my line of credit? I got a great credit score, done a ton of deals with you, never late on my payments. And Steve said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but you just gave me a financial crisis. I don't have a way to fund my real estate deals. So, Richard, I hung up the phone and I sat right here and I thought for a moment and I asked myself a question. And this is a powerful question to share with your audience. The question I asked myself will help fix any problem anybody's got anytime. I don't care if it's financial, relationships, career, health, doesn't matter. And here's the question I asked myself. I said, Jay, who do you know that can help you with your problem? And by the way, Richard, these people going around saying, oh, every problem's an opportunity. I want to throw up. I didn't have an opportunity. I had a problem, right? So I asked myself that question. Who do I know that could help me with my problem? I immediately thought of Jeff Blankenship, who lived in Greensboro, North Carolina at the time. He was investing in real estate, good friend of mine and Carol Joy's. And I called up Jeff and I told him what had just happened. He said, well, Jay, welcome to the club. I said, what club is that? He said, the club of losing your line of credit at the bank. My bank cut me off last week. I said, well, Jeff, how are you going to fund your real estate deals? He said, well, have you ever heard of private money? I said, no. He said, have you ever heard of self-directed IRAs to where individuals can take existing retirement accounts and loan it out to real estate investors and get tax deferred or tax free returns? I said, no, I never heard of that. So I hung up from Jeff and I studied private money. That is doing business with individuals, not institutional money. And in less than 90 days, Richard, I was able to attract, without chasing, begging, selling, or persuading, $2,150,000 in new funding for my real estate deals without ever asking anybody for money. And people ask me all the time, they say, Jay, how do you raise all that money without asking? Well, here's the answer. I put on my private money teacher hat, my teacher hat. And so I just start teaching people what private money is, how they can get high rates of return safely and securely. And so I've got 47 private lenders right now. Not one of them had ever heard of private money. None of them had ever heard of self-directed IRAs and how they could use retirement accounts or retirement funds. And so since that time in January 2009, Richard, I've never missed out on a deal for not having the money.
So how does that work basically?
Well, as I said, you're doing business with individuals, right? You're not borrowing institutional money. So what private lenders love, and I'm not talking hard money. A lot of hard money lenders call themselves private money. That's not private money. A hard money lender is typically a broker where they will raise money for their fund and then loan that money out to us real estate investors. So, how does it work to do business with a private lender? Well, a private lender, again, is an individual that loans money to real estate investors either from their liquid investment capital and or their retirement funds, and that way they are totally a passive investor in real estate, not like us, the entrepreneur that goes out and negotiates deals and finds deals. They just sit back and, earn the interest during the note as to why we're using the money. So a private lender is someone that's interested in investing in real estate. They want high rates of return safely and securely, but they just want to be passive. They don't want to negotiate the deals and et cetera. And so it's a win-win for everybody.
And where do you find these people?
That's a great question. There's three categories as to where you find these private lenders. First of all, is what I call your own warm market or your own connections. Those are people that are in your cell phone, on your email list, in your social media. The second category is what I call your expanded market. You're going to run out of your own connections after a while. So how do you expand your own network of warm connections? So that's your expanded network. And then the third category are what we call existing private lenders. These are individuals that are already loaning money out to real estate investors. And the question is, where do you find those? Well, a great place to find them are at self-directed IRA networking events. So self-directed IRA companies are companies that are approved by the IRS. They're also called a third-party custodian, and they'll have networking events. What's interesting is that over 70% of self-directed IRA account holders want to loan money out to real estate investors. So that's a great place to network with existing private lenders.
What would you say are some advantages and disadvantages
Of using private money?
Yeah.
Well, the list is long. I'll give you some of the big ones. One big advantage of using private money is we, as the borrower, we are the underwriter. We make the rules. When you go to the local bank or you go to a hard money lender, they make the rules. They set the interest rate. They set the frequency of payments. They set the maximum loan to value. But in this world of private money, where we are the teacher and we're teaching people what private money is, guess what? We are already approved. There's no applications. Your credit score isn't pulled. The reason private lenders loan the money out is because it is a collateral-based loan, so we're not borrowing unsecured funds. So we set the interest rate. We set the rules, the frequency of payments. Another big reason is, as far as setting the rules, is we set the maximum loan to value. So, in other words, you're teaching, instead of asking for a mortgage, you're offering a mortgage. And so, for example, one big benefit of using private money is we always bring home a big check when we buy the property. Typically when you're buying a property, you got to take a down payment, right? Well, not only do we get 100% of purchase price, but we will borrow up to 75% of the after repaired value. So how in the world can you bring home a big check every time you buy? Well, obviously this doesn't work unless you're buying a property at a discount. And the biggest profits are when you are renovating or rehabbing. Our average profits right now are $82,000 per single family house. So back to your question, the benefits. Your credit score's got nothing to do with it. You bring home a big check. Here's another big reason to use private money. You can close quickly and much quicker than institutional money. I make my offers that I can close within 7 days of making my offer. Well, you can't close in 7 days using institutional money, but you can close 7 days using private money. So as a result, you'll get more of your offers accepted because you're able to close quickly. I'm closing on a house at 106 Pilot Place day after tomorrow, and the sellers just reached out to us last week, and they're still living in the house. Well, here's a big secret, Richard, as to how we get more of our offers accepted. We close quickly. We'll go ahead and give them half of their proceeds from the sale at closing. And then whatever we negotiate for them to stay for another 2 weeks or a month, they'll get the balance of their proceeds when they move out of the house. So private money just puts you in control. It gets you more of your offers accepted. And here's another big one. When you use private money, you're not limited to the amount of private lenders you can have or the amount of private money you can have. There is no limit. Like in contrast to borrowing money from the banks, there's always a limit. So the list is very long and the benefits are very long as to why in the world private money is so advantageous. The bottom line is it gets you more deals and you make more money and you make it quicker.
So what would you say are some disadvantages then?
What are some disadvantages? Well, one disadvantage might be if you don't stay in contact with your private lender and stay in communication with them. They may have told you they've got X number of dollars to loan to you, but if you haven't been communicating with them, you may call them up for them to fund a deal and they've used the money elsewhere and the money's gone. So therefore, it's very, very important to stay in communication with your private lenders. You see, we never pitch a deal. I've never pitched a deal since 2009. And the way that works is we always separate the conversations of teaching what private money is to a potential private lender and then having a deal for them to fund. See, desperation, Richard, desperation's got a smell to it. And the worst time to be looking to raise private money is when you need it for a deal, right? So we teach the program first. The private lender tells us how much money they've got to work with. Maybe they have retirement funds, so we need to introduce them to a self-directed IRA company for them to work with. And then they tell us how much they got to work with. And then I tell them, I'm going to put your money to work for you just as soon as possible. So then maybe a week or two goes by and I'll call them up and here's the script for the good news phone call. I'll call them up and I'll say, I got great news. I can now put your money to work. I've got a house in Newport under contract with an after repaired value of $200,000. The funding required is $150,000. I know they got it. They told me they had $150,000. Closing is going to be next Friday, so you'll need to have your funds wired to my real estate attorney's trust account by next Thursday. I'm going to have my real estate attorney email you the wiring instructions. That's the end of the script. That's the end of the conversation. And the most stupid thing, Richard, that I could ask them is, do you want to do the deal? Of course they want to do the deal, particularly if they've already moved their retirement funds over to the self-directed IRA company that I recommended. They're not making any money until I put their money to work. So I am ethically bound to use their money on this next deal that I've got. So that's another, that's just, I mean, the benefits, the list is long.
So what about safety when you're doing the negotiations? Like you have your lawyer and they have their lawyer. So how does that work? So nobody gets, as they say, screwed.
That's right. Well, there's a number of ways that they are protected. So one way they're protected is the private lender never gives us, the borrower, money directly. They never write us a check. We're going to have a regular closing here in North Carolina. Closings take place by a real estate attorney. The closing documents are prepared by the real estate attorney. Most states use title companies. So regardless of who the closing agent is, the lender, the private lender, is protected by they wire the funds directly to the closing agent's trust account. So the money doesn't come to us directly. No funds are dispersed until after closing. That's one way they're protected. Second way they're protecting is we never borrow unsecured funds. You can legally, but don't do it. Protect your private lender. So we're going to give them either a mortgage or a deed of trust. Here in North Carolina, it's a deed of trust. We're going to give them a deed of trust to collateralize the note, the promissory note. So that's another layer of protection. We're not borrowing unsecured funds. Another way they're protected is the maximum loan to value that we do is 75% of the after repaired value. Therefore, they've got a 25% what we call equity cushion. That way, if the market comes down or prices drop some, then I can reduce the price on the house when I'm getting ready to sell it, and the private lender is still paid off and made whole. Another way that we protect the private lenders is we name them on the insurance policy as the mortgagee. That way, if there's ever a claim against that insurance policy, then the insurance company will make them the check payable to the private lender, the mortgagee, and to us, the borrower. So the private lender's got to sign off on that check before we would get the insurance check. We also name the private lender on the title policy as an additional insured. So in case there's any title issues down the road, they're protected with that as well. So there's many, many layers of protection that we give our private lenders.
So how does it work in the other states? It must be different, no? Or it's the
It's all the same.
okay.
The only thing that changes in other states is most states call it a mortgage. In North Carolina, it's a deed of trust that collateralizes the note. Now, I've got I run a mastermind, the private money mastermind, and these members that I've got are from California, Hawaii, Florida, Texas, all over the nation. And private money works in every state, no matter where you're investing.
Have you seen the things that went wrong in the process in your journey?
Well, of course, the rehab and renovation budget never comes in on budget. The rehab budget is always over budget. It always costs more to rehab them than you think it's going to. But that's why we use the formula. You see, the protection is not knowing your estimation of repairs to the penny. Everybody's protected because of the offer, and buying the home at a totally discounted price. So, because of the formula that we use on what we call the maximum allowable offer, all the way back, Richard, to 2009, over 500 rehab deals, every one of our private lenders has always collected every penny in returns and in interest that they were expecting when they invested into a deal.
So what if I'm gonna give like two scenarios? Like let's say one person is buying just a single family home and another person is going into multifamily. Uh how is it like for the single family home when it comes to if they want to refinance, how does that work?
Right. So that's a great question. So most of what I do is single family houses. So when you're using private money for single family houses, those deals are what we call one offs. One offs. And what that means is you got a single family house, and then you've got maybe a private lender or a couple of private lenders that are funding that deal. So each private lender's got their own promissory note, got their own mortgage or their own deed of trust. Now, in contrast to that, when you're doing multifamily, then you're not going to do one offs. What you're going to do is typically you're going to do what's called syndication, which means the operator, the real estate entrepreneur, will raise money for a fund. So they will create a fund for many private lenders, individuals to invest in the fund, and then that fund is used for the multifamily project. When you're doing syndication, typically you're going to have what's called a private placement memorandum, which is prepared by an SEC attorney. And so the SEC attorney draws up this document, and that explains how the fund is going to work. Are there any equity partners? Are they getting any percentage of the profit on the back end? When doing single family houses and one-offs, there is no participation in the profits. It's like the private lender puts money in a certificate of deposit at the local bank, and they know exactly what the rate of return is going to be, what's the interest that they're going to get. But instead of putting it in the bank, they're investing it in a single family house deal.
So you were saying at the beginning that the person who wants the loan, he's the one setting up the terms. So there's got to be some hard negotiation, because if the deal doesn't make sense to the other side, there's gonna be some negotiation.
There is no negotiations. This is the program. They either like it or they don't. So I'm not negotiating. I'm not negotiating on the program. This is the program that I'm offering, and they're going to get a whole lot more interest than they are at the local bank. But if they don't like it, that's fine. And here's why: there's so much more money, Richard, out there today in today's market to be used than there are deals. Prior to COVID, there was $18 trillion available in cash just sitting on the sidelines. Today, there's $31 trillion. Now, let me tell you when negotiation does come into play. I mentioned the third category of where you find private money, and those are people that already have existing self-directed IRA accounts. And so they already know how private money works. They've already been loaning money out, right? So when you're talking with those people, that is a negotiation conversation. That's why I much prefer to put on my teacher hat and teach people about what private money is and the opportunity to get high rates of return safely and securely that have never heard of it. That's what's interesting. Of my 47 private lenders, not one of them had ever heard of private money and private lending until I told them about it. And not one of them had ever heard of self-directed IRAs. So you, as the borrower, that just puts you so much more in control and in the driver's seat when you're teaching this opportunity to people that have never been exposed to it. And most people walking around have never heard of private money and how they can use their retirement funds. Now, it's not just their retirement funds. I got a lot of private lenders that are using just liquid capital and also their retirement funds. But again, when you're offering an opportunity and you're teaching this to people that have never heard it, then it really, really puts you to the advantage of offering them something that they've never heard of.
You were talking before about the program, but when you're doing that deal with the private lender, there's no middleman in between, no? Or it's
That's
just
correct.
oh,
That's correct. Yeah. With a hard money lender, that's what they are. They are a middle person. They're a broker between raising money for their private lending fund and then loaning it out to us real estate investors. But with private lenders, there's no middle person. It's a simple one-on-one transaction between you, the borrower, and the private lender.
so where can the borrower get educated on that? Like I know I think you're offering like the program, but let's say someone has never heard of you or they're somewhere like
Sure. Well, the best way to learn how to do this, I just finished putting this together. It's called Private Money Challenge. So I just created a brand new Private Money Challenge. And what it is, it's a series of 7 videos. They're only 15 to 20 minutes long each one. And it gives a great foundation. It's me on the video engaging with the person that signs up. So I'd love to invite your audience, Richard, to enroll in my Private Money Challenge at www.privatemoneychallenge.com. Again, that's www.privatemoneychallenge.com. As soon as you enroll, you'll receive the very first video training. And then the next 6 days at 9 a.m. Eastern Time, you'll get the next 6 videos. And I promise you, you'll learn how to raise private money without ever asking for money. And I promise you, we're going to have a good time doing it together.
so this goes for both parties, like the borrower and the private lender, because if the private lender never
This training is for us, the real estate investor, for the borrower to learn how to teach this opportunity to individuals that may want to be a private lender.
where can people find you on social or the internet?
Oh, sure. So on Facebook, very easy to find, Jay Conner, Jayconner. On YouTube, just look for Private Money, Private Money. And then on your favorite podcast platforms, Richard, I've got my own show. I'm in my 8th year right now. And whatever your favorite platform is or listening to podcasts, just go search for Raising Private Money. Raising Private Money with Jay Conner, and I'll pop right up.
Okay. And so I guess they could get educated there also too by listening to the podcast.
Oh, absolutely. Absolutely. I always have amazing guests that, in addition to myself, have raised private money. And I interview them twice a week. We release it on Monday mornings and then again on Thursday mornings at about 5 o'clock in the morning. I interview people about how they raise private money. What are their secrets? What are their favorite ways to raise private money? It's very, very educational for anyone that would learn how to raise money for their real estate deals.